Hey guys, welcome back to another weekly market update and forecast video. Now, usually I release these every single Monday, but from here on out, I'll be changing it to every Friday. One of you guys mentioned that it would be way more convenient if you had the weekend to plan your operations, and I absolutely agree. Also, a quick announcement, I will be doing a live this Sunday at 4:30 p.m. Eastern. So if you have any questions about anything, you know where to find me. Now, if you're new here, welcome. I teach about the trucking industry with a heavy focus on the spot market and freight market analysis. So if this is a topic that interests you, feel free to subscribe down below. So market, where are volumes climbing? Where are tender rejections climbing? Where are the opportunities to make some money? Ready? Let's go. As always, all the charts that I show will be linked down below. So let's start a little bit differently today. Let's start by reviewing what happened in the market this week. And the best way to look at it is by looking at rates. So starting with the flatbed, I'm just going to make it a little bit bigger. There we go. So for flatbed, you can see that these are all the different lanes. And something that is really nice is that there's a lot of green here. Green means there was increase in the total rate for that lane. Red means there was a decrease. The brighter the green, the bigger the increase. The brighter red, the bigger the decrease. And what we can see for flatbeds is there were quite a few increases here. Now, if we look at reefers next, we can see it looks a little bit different. There is some green, but for the most part, it's a lot of red, which means that a lot of lanes paid less this week than they did a week ago. There are some places where it did increase, such as from Wisconsin to Michigan, Cincinnati to Atlanta, LA to Portland. So there are places, but for the most part, there were a lot of decreases in the prices. Now, for the dry van is same as reefer pretty much. Some green, but mostly red, a lot of decreases. And this is something that I felt personally because when I had my dry vans in the Midwest, it was pretty hard to find decent paying lane going from Midwest to Midwest. The rates went down by, I think it's like 50% from 2 weeks ago. So yeah, there was definitely a decrease there. So basically, if you have a reefer or a dry van and you experienced a nice drop in rates, you are not alone. It is shown in the data. Now on to what will happen next week. So let's start by looking at the outbound tender volume versus the tender rejections. The outbound tender volume is in blue, tender rejections are in white, and this is for the past 2 months or so. So what we can see is that volumes currently, they are crashing. Volumes are crashing. But finally, the tender rejection index is going up, and it has been going up slowly since the 15th. Since the 18th, it's been going up all the time. Now, this is incredible news because tender rejections, they tell us which direction will the spot market go, right? If tender rejections are climbing, that means the rates on the load board will start climbing as well. Now, this upward trajectory is something that we, the spot market carriers, will start feeling only around next week. And this is because of how it is measured. This is why this is a forecast. Tender rejections that happen today will only hit the load board in about 3 to 5 days from now. So what happens right now is going to be felt only a week from now or so. Now, this is for all equipment types. This is not specifically for a flatbed versus a dry van versus a reefer. So let's look at tender rejections by equipment type and how much they changed since last week. So blue is van, white is reefer, and this red line right here is flatbed. And what we can see, the flatbed since 10 days ago, it's a little bit over a week. Since 10 days ago, the tender rejection increased by 48%. Flatbeds are doing really, really well. Now, if we look at reefers, let's look at dry vans first. Something that is a really positive sign because dry van tender rejections have been decreasing week over week over week. Finally, we see a 2% increase in the last 10 days, which is yay. I'm really happy with that. I'll take what I can get. Now, for reefers, it's a little bit of a different story. There was actually an 18% decrease in tender rejections since around 10 days ago. So basically what we can see from here is that flatbed rates next week will continue their climb. Dry vans will start their very slow recovery. Reefers will unfortunately continue their decline in rates, and this is on a national level, right? Now, what about volume? Now, unfortunately, volume charts are available only for dry vans and reefers. So if we look at the volume, the blue is the dry van, white is reefer. We can see that volume since 10 days ago they decreased by about 3%. So volume is going down. Now, someone asked me to show the spread between contract and spot rates. So here it is. So the way to understand this chart, now this is for the past 3 or 4 years, 4 years. So let's go here. What we need to understand, if the value is negative here, it means that there is loose capacity, which means there's still a downward pressure on contract rates because of the spot market. And it also means that shippers are still getting a nice discount by moving freight on the spot market, meaning basically contract rates are higher than spot rates but are going down, right? So currently we're at negative 0.79. Now, if we look at the historical data, yeah, you can see since 2022, there was quite a bit of a crash here. Let me make it bigger. 2022, it just crashed. Oh, I did not expect that. We shall see what happens. Right now, it seems to be going up. It seems to be going up, which is nice. We need this number to go higher. Hopefully it does soon. So now let's go ahead and look at the volume, more specific data for the equipment types. Now, unfortunately, I do not have this data for flatbeds simply because Sonar does not provide that data, but hopefully they will soon. So let's start with reefers. With reefers, outbound tender volume index. The top 3 places with the highest volume for reefers is Ontario, California, then we have Joliet, Illinois, and Fort Worth, Texas. These are the top 3. Although Ontario, California decreased by 8.5% since last week. Now I'm going to again leave this chart down below for you guys to examine, but let's take a look at the map. So this is changes from last week for the reefer. Red means that there is a decrease in volume, whereas blue means there is an increase. So what we can see from this map is that the West Coast, especially the Northwest, as well as California, volumes decreased quite a bit there from last week. We can also see that volumes are decreasing in parts of Indiana, Ohio, Iowa, Arkansas, Tennessee, all of these places. Huge volume drops in Illinois in this market, in DC, and in South Carolina and Georgia. Now, where did volume increase? Well, Kentucky, Buffalo, New York, love that place, by the way. Rates from Buffalo, New York for reefers are pretty decent there, so I do like that place. Then volumes increased in parts of Nebraska. We have South Dakota, Minnesota, some parts on the East Coast as well. But in general, if we look at the big picture, for the most part, there was no change. Now let's look at the outbound tender rejection rates for reefers. Where will the rates be the highest potentially, right? So we have the highest tender rejections currently for reefers are in Spokane, Washington, Bismarck, North Dakota, and Pendleton, Oregon. Let's look at the map again. Now this is a map, the change in tender rejections for reefers from last week. Again, red means that there was a decrease in tender rejections. Blue means there was an increase, right? So we can see that currently the biggest increases in tender rejections were in Washington. There are some increases in Utah as well. Idaho, which usually is amazing, the tender rejections are decreasing there, so you can expect the rates to start decreasing as well. Then we have Fort Worth, Arkansas. Illinois is pretty good, but again, the biggest increase in tender rejections actually Florida, around Jacksonville, but the biggest one is somewhere around Washington and Oregon, right? In terms of the Midwest, sad to say, unfortunately, the tender rejections either decreased or increased ever so slightly. Okay, now for dry vans. First, we start with tender volumes, right? Highest volume places for dry vans are Atlanta, Georgia. Then we have Dallas, Texas, and Ontario, California, although all 3 decreased. If you look at this chart as a whole, you can see there's a lot of red, which means a lot of outbound volume for vans has decreased from last week. So again, volume map, change in volume for dry vans since last week. Red means there was a decrease in volume, blue means there was an increase in volume. So what we can see is for dry vans, this area right here, New Mexico, parts of Arizona, we have Colorado, Utah, Idaho, Nevada, Wyoming. All of these places, the volume decreased. Although in Oregon and parts of Washington, it increased, as well as in Arizona. We see that in the South, it's also starting to increase the volume. In the Midwest, by the way, if it's gray, it's still a decrease. It's just a very, very minute one. But if you look at the Midwest, other than, the northern parts of Minnesota, like Duluth, or there's also Madison, parts of Chicago, pretty much in the Midwest, there was a decrease in volume. Now let's look at the tender rejection index. Where do you need to be to experience an increase in rates? The places with the highest tender rejections for dry vans are Huntington, West Virginia. Then we have Cape Girardeau, Missouri. And finally, we have Omaha, Nebraska. So let's take a look at the map. It is so red. So what we can see, again, red means that the tender rejections decreased from last week for dry vans. Blue is the opposite. And what you can see is that in the Midwest, a big portion of the Midwest, Kansas, Missouri, look at that. Iowa is not affected as much, but Minnesota, Illinois, Wisconsin, around Detroit, Michigan, right? Look at these tender rejection decreases. And I really felt this with our dry vans. Being in the Midwest and trying to go short loads Midwest to Midwest is proving to be harder than it was about 2 weeks ago. Now, there are also some increases. You can see that the South, Mississippi, Louisiana, Alabama, Georgia, North Carolina, Tennessee, Kentucky, this is where Oklahoma as well, and the southern part of Texas, these are places where the tender rejections increase. So you can expect higher load rates there than last week. Of course, we can't forget Maine. Maine tender rejections increased as well, but from what I understand, it was the weather there. Correct me if I'm wrong. I believe the weather there was so horrid that there are not enough trucks there, maybe. I am not sure. But speaking of trucks, let's take a look at how many trucks there are in the market. And this is for all equipment types, right? So let's look at the changes. So if you see a red area, that means that capacity left that market from last week, or more capacity left that market. Basically less trucks in that market now. If it's blue, capacity increased, it came into that market. So what we can see, there are only a few places where capacity really left the market, right? Where there are less trucks now than last week. And that is North Carolina, South Carolina, Georgia, Alabama, Mississippi, parts of Iowa and Illinois, and Arizona. These are the three places where, compared to last week, there are less trucks. Everywhere else, especially on the West Coast, and this area right here, Michigan, Indiana, Ohio, West Virginia, and also the Midwest, capacity increased. There are more trucks that came in to that market. Okay, finally, we will look at diesel prices. And this is, of course, really, really good news. You can see the diesel prices. There we go. Diesel prices are continuing to drop, and currently, as of the 23rd, are at 4.5 per gallon, which is great. Now, usually I also show a map, but I think that it would be more beneficial if I actually showed you the prices. So if you look at this spread, you will see these are all the different market areas, right? And what we can see here is it's pretty much all red. This means that every single market area experienced a decrease in diesel prices since last week, which is awesome. Now, let me show you a more detailed view. Where are diesel prices over $5? Fresno, California, San Diego, California, basically the West Coast and the East Coast, as you can see here. But there are places where diesel prices are less than $4. And these places are right here. You can see Missouri is a big one, Minnesota, Texas is a huge one, Oklahoma, of course, Kansas, Arkansas, basically the Midwest and the South. This is where you'll get those less than $4 per gallon in terms of the diesel prices, right? So Midwest and South. But honestly, I just want to keep looking at this chart and seeing how beautifully red it is. I just want it to continue declining. At least that will stop eating away at the at the bottom line. Rates are crap right now. They will start getting better. I still believe that, but the diesel prices are really important because that is one of the biggest expenses, right? It actually is the biggest expense. So the fact that it's all red, everywhere the diesel prices are going down is awesome. So what can I add to these numbers? Well, number one, the biggest thing that stands out to me recently is that the Midwest, going from Midwest to Midwest, it's kind of dying for dry vans. The rates have been falling off a cliff in the Midwest. Now, I did learn a really nifty trick. The way to get a good rate from Midwest to Midwest is to wait to book your load after lunchtime. This is because early in the morning, the existing capacity is taking all those loads and already moving. So after lunchtime, there's not as much capacity left over. Now, this is a risk because pretty much 90% of the volume is soaked up by the existing capacity. So after lunchtime, there is not much to choose from, but what does come out ends up paying much better than it did in the morning. For reefers, my only advice is stay away from the West Coast. I stupidly sent one of my guys to Utah, and then he grabbed a load from Idaho back to the Midwest, and he has been stuck for the past 2 days again on the I-80. Basically, I'm very good at giving advice, but I'm very bad at following it myself. In terms of my game plan next week, my game plan is to keep my dry vans in areas where the tender rejections are the highest. So areas like Iowa, Michigan, Indiana, Kentucky, Mississippi. For reefers, same game plan pretty much, but of course also considering that I have to get those miles in because reefers are operated by our team members, our company drivers. Obviously, this whole idea of keeping my trucks where the tender rejections are high might backfire because tender rejections, they do tell us about what the rates will look like in that area, whether they're increasing or decreasing. Unfortunately, it doesn't tell us about lanes, right? So it might be really, really good rates in the area going to really, really bad places. So we shall see what happens. Anyway, guys, thank you for joining me today. I hope this video provided some insight. Maybe you have a better idea of how to plan your operations for next week. And I will see you guys live this Sunday.